This is Manjunatha Sir, working as an assistant professor of commerce, Government First Grade College, Tumkur. Now let me discuss in relation to the canons of taxation. First we know that what is the meaning of canons of taxation. Principle or rules to build or set up a good tax system. In fact, canons of taxation are related to the administrative part of a tax. Then, now let you know that canons of taxation. The first canons of taxation is equity or equality. Among the assessee, the payment of tax should be equal. Payment of tax depends on ability to pay among the assessees. The second point is that convenient. The mode and timing of payment of tax should be convenient to the taxpayers. This is the second principle of canons of taxation. And third one is that certainty. The taxpayer should be able to predict his taxes over a period of time, how much tax has to be payable during the assessment year. And fourth one is that economy. The economy in the form of cost and time in relating to that compliance and administration of a tax. And fifth one is that adequacy. The tax system should be able to yield enough revenue for the treasury, and the government should have no need to resort to deficit financing. Sixth one is that flexibility. Changing requirement of the economy. This is flexibility. And next one is that canon of productivity. This good principle to follow in a developing economy. Better to have to fewer tax with large revenues, that is productivity. Next one is that canon of elasticity. Now let you know the definitions of income tax. Now let me discuss the definitions. First one is that assessee, second one assessment, next one assessment year, then previous year. The first one, assessee, is defined section 2 subsection 7 of Income Tax Act 1961. An assessee means a person who is able to pay any tax or who is liable to pay any other sum of money under this act. It may be interest, penalty, or any other forms, or in respect of whom any proceedings under this act has been taken for the assessment of his income or assessment of fringe benefits, or in respect of whom any proceeding under this act has taken for assessment of the income of any other person in respect of which is assessable, or in respect of whom any proceeding under this act has been taken of the assessment of the loss sustained by him or by such other person who is deemed to be an assessee under any provisions of this act, or who is deemed to be an assessee in default under any provisions of this act. All these persons are called it as assessee. Now let me know that deemed assessee. A person who is deemed to be an assessee for some other person is called deemed assessee. Example, legal representative of the deceased person. And next one is that assessee in default, to whom we call it as assessee in default. When a person is responsible for doing any work under the Income Tax Act and he fails to do it, he is called an assessee in default. Then now let me know that the definition of assessment. Section 2 subsection 8, it defines that assessment is a process or procedure to compute taxable income and a tax liability of a person in any particular financial year. And assessment year, section 2 subsection 9, it defines that assessment year a period of 12 months. Assessment year means a period of 12 months commencing on the first day of April every year and ending on 31st March of the next year. An assessee is liable to pay tax on the income of the previous year during the next two following assessment years. And now let you know that previous year. Section 3 of Income Tax Act, it gives the meaning of previous year. Previous year means the financial year immediately preceding the assessment year. The financial year begins on 1st April and ends on 31st March. The year in which income is earned is known as previous year, or what we call it as the income is earned is known as previous year. Usually it starts from 1st April and ends on 31st March. In case of newly set up business or profession or any other new source of income, the first previous year may be less than 12 months. It may not be that 12 months, it may be less than 12 months. It commences from the date of commencement of the new business or profession and ends on 31st March. Thank you.